You have secured suppliers, found customers and agreed a launch date. But before the first case of wine, beer or spirits is sold to another business, there is one question that can stop the entire operation. Do you need approval under the Alcohol Wholesaler Registration Scheme? In this video, Licensing Professionals explains who AWRS applies to, what HMRC examines, the 45-day application rule, what happens when a business changes ownership and the checks every trade buyer must make. Start with a scenario that regularly catches purchases out. A newly incorporated company buys the stock, customer list and trading assets of an established wine wholesaler. The seller already has AWRS approval. Can the purchaser simply continue using that approval? Usually, no. Where the business transfers from one legal entity to another, AWRS approval does not normally transfer. The new owner must apply in its own right and should do so at least 45 calendar days before the change of ownership. Until approval is granted, the new entity cannot lawfully trade in wholesale alcohol. That timing risk needs to be identified before completion, not afterwards. AWRS is the Alcohol Wholesaler Registration Scheme, administered by Revenue and Customs. It applies to controlled alcoholic products sold at or after the duty point. In practical terms, that usually means duty-paid alcohol being sold or arranged for sale from one business to another for onward sale or supply. The scheme was introduced to tackle alcohol duty fraud and protect legitimate supply chains. Once approved, the wholesaler receives a unique reference number, or EARN. That number must be supplied to customers and included on wholesale alcohol sales invoices. The quickest initial test has 3 parts. First, does the business have an establishment in the UK? Second, are the sales made at or after the point at which alcohol duty is due? Third, are any sales made to another business for onward sale or supply? If all 3 apply, AWRS approval will normally be required. The rules can catch general wholesalers, specialist wine distributors, cash and carry businesses, importers, producers, brokers, auctioneers and retailers that make regular business-to-business alcohol sales. The label placed on the business is less important than what the business actually does. Most pubs, bars, restaurants and off-licenses do not need AWRS approval if they only sell directly to consumers. There is also an exclusion for genuinely incidental wholesale sales. For example, a shop may exceptionally sell a few bottles to a nearby restaurant that has unexpectedly run out. But regular, promoted or planned business-to-business sales are unlikely to remain incidental. Wholesale sales between members of the same corporate group may also fall outside the requirement. However, sales outside that group can trigger the need for approval. Where the business model is mixed or unusual, confirm the position before trading. Timing is critical. A new wholesaler must apply at least 45 calendar days before it intends to start trading. HMRC says applications from new businesses are usually processed within 45 days, but they can take longer where information is incomplete, unclear or requires further checking. HMRC may contact the applicant, request additional evidence or carry out a pre-approval visit. The application acknowledgement is not permission to trade and is not the AWRS EARN. A new wholesaler must wait until approval is granted. Build the 45-day period into acquisitions, leases, supplier contracts and launch dates. One important procedural point is often missed. An agent cannot use the AWRS service to submit the application on behalf of a client. The application must be made by a responsible person in the business. For a limited company, that may be a director, company secretary or authorized signatory. For a partnership, it is one of the partners. For a sole trader, it is the proprietor. An advisor can still assess eligibility, structure the evidence, help prepare the answers, review the application and support the applicant through HMRC queries. But the responsible person must use the correct government gateway account and submit the declaration. Do not begin the online form with only a company name and an idea. At minimum, HMRC will need details of the legal entity, tax references, directors or partners, premises, products, customers, expected turnover and main suppliers. A VAT number is provided if the business is registered. HMRC may also ask for a business plan. That plan should show a credible and commercially viable operation, including costings, suppliers, customer base, market research and profit forecasts. The checks may extend to accounting and stock control systems, premises, funding and financial viability. A dedicated business bank account and clear evidence of funding can strengthen the overall evidence, even though the precise documents requested will depend on the case. AWRS is not simply a registration form. The applicant must pass HMRC's fit and proper test. HMRC must be satisfied that the business is genuine and that the people with important roles or interests are law-abiding, responsible and do not present a significant risk of fraud or revenue non-compliance. HMRC may check tax history, company's house information, credit reference information and relevant convictions. It may inspect suppliers, customers, accounting systems, stock controls, premises and financial viability. The strongest application tells one consistent story. The ownership, funding, supply chain, customer base, forecasts and operational arrangements all make sense together. AWRS does not only affect wholesalers. Any trade buyer purchasing duty-paid alcohol from a UK wholesaler for resale should verify that supplier using HMRC's online lookup service. Do not check only that the number exists. Confirm that the business name, trading name and principal place of business match the supplier you are actually dealing with. Keep a dated record of the result and refresh the check periodically. If the supplier is not approved and the transaction should fall within AWRS, do not proceed. HMRC also expects sensible commercial due diligence around contact details, payment methods, invoices and whether the supplier behaves like a legitimate business. The consequences are serious. The maximum behavioral civil penalty for trading without approval or buying from an unapproved wholesaler is £10,000. Knowingly wholesaling without approval, or knowingly purchasing from a person who should be approved, can be a criminal offence. The penalties can include a fine, imprisonment for up to 7 years, or both. Alcohol stock may be seized. An approved wholesaler may have its approval restricted or revoked. Individual regulatory breaches can attract fixed penalties, and HMRC may ask a licensing authority to consider action against a retailer's premises license. AWRS is therefore both a tax compliance and licensing risk. AWRS problems are far easier to prevent than to correct after a launch date or business purchase has been agreed. Confirm whether the scheme applies. Identify the correct legal entity. Allow at least 45 calendar days. Build the evidence before submitting and do not trade until approval has been granted. Licensing professionals can assist with eligibility, structure, application preparation, fit and proper evidence and ongoing due diligence. The responsible person must submit the application, but they do not have to prepare for it alone. Link to free AWRS compliance checklist in bio. Visit licensingprofessionals.com or call 0208 050 5704 to request an initial consultation. Licensing Professionals, for all your licensing needs.